Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this stock market update video, I'm going to talk about what I think may have been the bull's last stand, so stay tuned. All right, let's dig in here. We're going to take a look at the Dow on the daily basis. So here's the rally that started last Thursday, and I talk a little bit more about this in a post on my website by the same title, The Bull's Last Stand. And here's the reversal day that occurred on that Thursday, the 16th. And we rallied every day up into here. Now, one day was down and that kind of thing, but the rally continued. And it ended with the orgy of buying that occurred on Thursday, the 23rd. Okay, the day the vote was going on. And why did that huge buying occur? What was the extreme enthusiasm? There was a poll that came out that showed that the Remain campaign was leading the Leave campaign by a few points. That was it. And the betting that was going on with the bookies in the UK was leaning heavily towards the Remain side. So based on those two things that was going on, everybody was buying as if it was a sure thing. Okay? Well, as we all know, that all started to change as the vote count rolled in Thursday night and the futures went heavily in the tank. And here's what happened on Friday. The Dow down over 600 points. And I talk about in my post about how market after market after market, basically around the globe, everything got decimated. And so, I talk more about that. You've read a lot about it in the news already, so I don't need to reiterate. What I do want to spend a few minutes on just to show is the comparison here between the Dow and the Transportation Average. Okay, so what's on the screen is the Dow weekly, the Dow Industrials on a weekly basis, and the Dow Transport on a weekly basis. Same exact time frame down below here on the time frame. It goes back to, what's the first bar? December of 2012. So, last little over about 3.5 years. This is the last 3.5 years. This dotted line shows where the Dow Transports peaked. So the Dow Transports peaked right here, and they started going down like this in this trend, you can see. But the Dow continued higher for quite a little while longer, quite a few weeks. So we had a major divergence here that then ended up having a major break, rally back, another break. Then we rallied to a higher high here on the Dow in April, above the November rally high. But did we get that confirmation? I circled it here, or put a loop around it, whatever we call it. It's not a circle. Did we get confirmation? No, we did not get any confirmation on the transports, and the transports continued to show continued weakness, a lot weaker than the Dow Industrials. This to me is a very, very negative sign, because when the markets are in sync and when the Dow Transports confirm and they're in sync together, that's when the market moves higher, and that's when things are right, and things are not right in the marketplace right now. Let's take a look at the short-term trading index, and let me pull that up. Here we go. So, on Thursday, with the orgy of buying that occurred, we had a very extreme reading on the trend. And that was the most extreme reading that we had in like 3.5 months. And then what do? We get the most extreme bearish reading on Friday that we've had since this day right here, February 2nd. Look at the huge range in the swing. Now, does this mean a bottom? No. What I look for is a cluster of like 2 out of 3 days. If we go back to August, you can see the classic cluster that occurred 2 out of 3 days in here over 2. And that was a signal of a short-term bottom occurring. I'm not seeing it in my other indicators. And by the way, when I look at the McClellan oscillator, which I share with my insider members every day, the McClellan oscillator is not even close to being severely oversold. Okay, we're only slightly oversold at this point on the stock market. So I find that very, very interesting. All right, let's take a look at a couple of the market indicators I call key market indicators. The semiconductors, big reversal candle here on the week. They were down 0.85 on the week. Let's take a look on a daily basis. Here's the big drop, big move. you know, again, they did not break out to new highs in here. We're reversing back down. Looks like a big break. The next one is the home builders that we like to look at. Home builders, nice strong move to the downside for the week, down 0.74. Not quite as, you know, not super negative, but it does look like, you know, we're putting in kind of a sideways top in here on the home builders. And the next one is we're going to look at the banks today. And of course, the banks really got killed, all the banks. We'll look at Goldman Sachs, Citigroup, and Deutsche Bank here in a minute. But the PowerShares KBW Bank ETF was down pretty big on Friday. You can see this break. This is a classic setup look that's showing up in a lot of the banks and in XLF also in the financials. So big negative picture. And of course, the banks are weak because people are worried about the banks in Europe. People are thinking about what do we not know about. A tremendous amount of uncertainty right now and concern about a huge rippling effect. All right, let's take a look first of all at Goldman Sachs. Goldman Sachs, see this arrow right here? This is where the insider members, we got in with put a trade idea here and wrote it down, had a very nice profit on it. We got stopped out here on the second half. It still ended up being profitable, but unfortunately, this move stopped us out because look at the big move that occurred on Goldman Sachs on Friday, down 7.1%. Still very bearish scenario on Goldman Sachs. Here's where it peaked out back a year ago in June of 2015. So that's the picture on Goldman Sachs. It continues to look just like a lot of these other banks. Let's take a look at Citigroup. Citigroup down 9.4% on Friday. And again, the picture I just showed you about KBW, the banking index, same exact picture like this. Now, when you go, let's take a look at a weekly chart. When you look at a weekly chart, this is the post-crisis high. And I know I talked about some of these banks back to, I think it was June 9th or so on a post and a video. And, you know, I showed this graph then. I mean, look at Citigroup. I mean, it's just terrible. You know, this the rebound, the performance back off the financial crisis lows is just not even close to being, you know, anything great. And just very weak overall picture, I believe. And right now, we're just reinforcing that. We're getting lower lows and lower highs. The downtrend's on. And then the last one we're going to look at today is Deutsche Bank, and Deutsche Bank is the worst of the whole bunch. The worst of this three anyway, let's put it this way. Down 17.5% on Friday. And this is really a gappy. A lot of ADRs get like this with the gappiness in the daily trend. But we look at the weekly, you think, well, okay, you know, Deutsche Bank, okay, we're looking for a bottom in here maybe. You know, it's coming down. I don't think so. Not yet. You know, when you look at a weekly basis, look at this picture and look how strong the downtrend is and look how it's chopping down here and look where it's at. It is below the financial crisis low of 2008, 2009. That's where it's trading right now. This is where it's at. So pretty negative picture on Deutsche Bank. You know, it's just reinforcing, I think, the concern that everybody has about the financial situation with the banks and with Europe right now. All right, that's the picture for the weekend. Hope you found that helpful. If you did, please hit the share the video, hit the like button, and if you're not a subscriber, hit the subscribe button. All right, everyone, that's it for this weekend. Have a great weekend. Talk to you on the next video.